So I've lost a decent chunk of money over the past few months while making some bad decisions and some good-ish decisions. I opened this portfolio back in 2020 and so much has happened since then, so we have a lot to go over. So I have 3 different portfolios. I'm not going to be selling every single stock in every single one of them. I just had to make the title and the thumbnail a bit more appealing to make the numbers a bit higher because, you know, that's what gets the clicks. So, you know, I just gotta make that, you know, YouTube paycheck, you know, leave me. Boy, if you don't. But in all seriousness, I do have a big decision to make. I can either let all of this money go down the toilet or I can buy in and hope for the best. Now, I'm gonna make the decision later, so stay tuned. So back in 2020, I bought a tiny piece of Tesla and I also bought Nike and I bought Apple, Neo, PayPal, Square, C, Fiverr, Amazon, and the rest of the bunch. Since that time, I've sold quite a lot of them. I don't own Nike anymore or Amazon. This is just a few that I actually have. Tesla is up by 8.77% in the past 2 years, technically. Now, is that good? I'm not too sure. So the first major step I'm going to start with is by selling one of my favorite stocks, which is going to be Tesla. Tesla just has to go. My plan is to actually start all over again. So now that's it, Tesla is gone. All the efforts that all my shares have done over the past 2 years is completely done for. But interesting thing is, not too long ago I did have the opportunity to sell Tesla at over $1,000, but I didn't sell because I don't usually sell any stocks at all. I was hoping to actually hold on to Tesla, but right now it looks like over the past month Tesla has recovered slightly. So to be fair, now probably is the best time to sell if I'm going to sell any form of shares. But Tesla is going to be the first one to go. All of this money is going to be going towards one stock that I'm going to own at the end of this video. Before that, S&P 500 isn't doing too bad. Now what's going to happen is every single stock that is above negative 50% is going to be leaving this portfolio. So something like the S&P 500, although I'm actually down, this is also going to be going. Now this is a massive thing because I'm breaking the #1 rule of investing, which is to never ever lose money. If you're going to invest money, don't lose money. So in that case, just because this is a very, very painful thing that I'm doing, losing all of this money, what's going to happen is anything below negative 50%, I'm just going to leave on this portfolio. I'm going to eventually sell them. So I'm going to sell it eventually, but my plan is to at least recover a tiny bit. So looking at something like Fiverr is down by negative 74%. Now that is massive. I've almost lost every single amount that I invested into Fiverr. It's nearly gone. All I have left is £50. I've lost £172 since I invested into Fiverr. Now in the next 1 second, all of the stocks I'm going to be keeping are going to be gone. Don't know if I did that right. All that is left is PayPal, Fiverr, and Block. Now the reason why Fiverr is still here is because obviously it's on negative 74%. Now I invested into Fiverr back in 2020. Fiverr was doing well, it was growing. We can see that the chart was actually doing really, really good. I invested around this point, but obviously eventually it started tanking from February 2021. My hope was that it was going to be doing good, because obviously we can see the extended growth all the way from March. What I didn't realize was Fiverr was only doing well because a lot of people were staying home, people were working, so that made Fiverr earn more money. Of course, I didn't think about this back then, but now that you think about it now, the only way Fiverr can recover is if there is another form of lockdown that forces people to work from home and people have no choice but to go into things like Fiverr. Now, is this gonna happen anytime soon? It's not really looking like it. It went up for about a year, from around March to February, and since then it's corrected itself and has gone straight back down to where it started from. So Fiverr unfortunately has to go. I had the opportunity to sell a while back, but I didn't sell because I was still hoping that it's going to eventually go back up, but it just seems to be going back down over and over again. At this point, it seems like this is the lowest it's ever been. It might be a bad decision not to sell now, but I'm going to wait a few more weeks to hopefully recover some sort of money. If not, then I'm just going to have to take the L. But either way, it seems like I'm going to lose money on Fiverr. Now, honestly, when it comes to PayPal, I have no clue why PayPal is down. This is not something I've checked, so definitely don't take financial advice from me. I'm just taking it based on vibes. Of course, PayPal, whenever I think of PayPal, I think of something that Elon Musk was involved in, so I'm hoping it has a lot of potential. And I hear a lot of PayPal, to be fair, from people, and I use it myself, so I'm hoping it'll do well. I haven't checked why it's actually doing really bad at the moment. I don't think they have a lot of competitors, but PayPal is down at the moment and I have no clue why that is. This is also the same for Square, so we're just winging it at the moment until we can recover some penny. When this portfolio goes back up even a tiny bit, then I'm going to sell everything I have and I'm going to be reinvesting every single penny into this one stock. So now what's happening to all of this money that I now have? I'm going to be investing every single one into this new platform called Invest Engine. I'm also going to be investing every single penny into the S&P 500. Hear me out. The reason why I'm investing into the S&P 500 is because I'm going through the safe route now. Not because I don't mind taking the risk, but I also do have my dividends portfolio, which is a bit more risky. I'm going for the S&P 500 because things are more guaranteed. Now I'm trying to save for the long term. I'm trying to save for things in the future, for kids or whatever might be coming up, for housing and all that. So I know with the S&P 500 there is a future there. Now if I was invested into this stock since 2020, I would have had a larger growth than I actually had when I invested into Tesla and Square and all of these other stocks, which ended up losing me a lot of money. But the primary reason to why I left FreeTrade is because they're just being annoying. FreeTrade just wasn't really cutting it for me. There's a lot of minor issues that I don't like when I'm trying to buy something, and just all these little hiccups. So I'm gonna leave FreeTrade, and now I've actually moved on to Invest Engine. Now not only does Invest Engine actually give you £25 for signing up and investing, there's a lot more that this platform is offering. Now the first major feature is that there's no buying or selling fees. So this means I can continue to invest and I don't have to worry about the same buying fees that I had when I was buying into stocks on FreeTrade. Now this is only a comparison. This is just the major reason to why I actually prefer Invest Engine at the moment. Now the biggest reason of all is the automations. I prefer automations in anything that I do in my businesses. Whatsoever I'm doing, I need it to run by itself. If it runs by itself, I'm happy, because then it means I don't have to monitor it or take care of it every single day. Now with Invest Engine, I'm able to just have money going into this account every single week, and I know that my money is going to continue growing at a steady rate for the next 10, 20, 30 years to come. The platform also looks really simple. It looks good. It looks, it's not really complex. It shows you every single company in the S&P 500 and where my money is being invested in and all sorts. One major thing that they also have is managed portfolio. Now they can manage your portfolio for you if you want to, but there's going to be more details on all of this down in the description below. But they can actually manage your portfolio for a tiny fee. But this means that they can run everything for you and you do not have to worry about a single thing. Now of course, do be aware that your capital is at risk, but it just means that me personally, for me investing into the S&P 500, there's a lot less to worry about. There's a lot more that is guaranteed in a way. I mean, in terms of the stocks, I wouldn't use the word guaranteed, but it means that it's better and there's less risk than investing into things like, Fiverr that has lost me £172 since I started investing. So Invest Engine will be my second portfolio from now on. It's going to be the major one that I'm investing most of my saved stocks, especially the S&P 500. I might eventually invest into more ETFs, but that is going to come, and I'm going to show you guys an update on that in the future. A few people have been asking me about what new platform to invest into because FreeTrade has been on hold for some time. Do check out Invest Engine. Is one that I definitely recommend, and if you actually do sign up, you do get free £25 on top of the £100 or whatever amount you do invest. So it's definitely one I recommend. Check out the link in the description below. This is my plan for the next 5 years. With the growth coming from my dividend stocks and the dividends I'm gaining every single month, as well as the proven growth from the S&P 500 for the past decade, as it continues to give around 10% every single year, my plan is to somehow combine both and gain a lot of money in the next 5 years. So I'm going to invest an initial amount of around $1,000 into the S&P 500. Then I'm going to be investing around $500 every single month for the next 20 years. Now if I'm able to keep this up, in the next 20 years I should have around $350,000. So around that point I'm going to be around 40, which isn't too bad to have almost $500,000. And to be fair, what's going to be happening is I'm probably going to be adding more than $500 every single month because my earnings will have increased by then. So in the next 20 years I should have approximately $500,000 from the S&P 500 alone. So the big question is, have I given up on growth stocks? Certainly not. Now the only stock I really care about is Tesla. I'm going to try to find a way to reinvest back into Tesla. The rest of them I don't really care about. So if the price doesn't go crazy and skyrockets, then I will be buying back into Tesla at some point.